Hello and welcome to Fintech Chatter, the podcast where I chat with fintech leaders about their secrets to success. I'm Dexter Cousins, your host and the founder of Tier 1 People, the executive search firm dedicated to connecting high-growth fintech companies with exceptional leadership talent. With a proven track record placing top executives in mission-critical roles, Tier 1 People is a trusted partner for many of the world's most recognizable fintech brands. Today's guest is Simon Schwarz from FreighInsure. Simon, welcome to the show.
Thanks, Dexter. Great to be here.
Long-awaited Fintech Chatter debut. We've been long-time collaborators, so it's great to kind of finally have you on the show and talk about FreighInsure.
Really happy to be here. Thanks, Dexter.
Yeah, so first of all, before we talk about FreighInsure, can you give our listeners a little bit of a kind of short background on who Simon Schwarz is and how you got into fintech?
Sure. My journey's been, I think, a little bit of a traditional one. I worked in banking for nearly 15 years. I left traditional banking and investment banking, and my first role was as a executive of one of Australia's largest fintech businesses. But, you can run an investment banking business, you can run a fintech business. And I found that startups, scale-ups, completely different kettle of fish. But I had all the functional skills from my banking days to really make a go of it in fintech. And since then, the last 10 years, every business I've been involved in has been fintech or Insurtech. And it's really about leveraging the things all the traditional skills, credit risk, product design, customer satisfaction, and doing it in a way that you can distribute better, faster, and more accessibly than anyone else using technology.
So you've worked for some, really recognizable brands, Advisor Zip. You've worked also at SocietyOne, which is one of the, OG Australian fintech businesses as well.
Years,
yeah. You also spent some time at BizCover, is that right?
That's right, yeah.
Yeah. So kind of BizCover for me was one of the first, I'd say, kind of insured in Australia as well, and it really kind of started to get the incumbents to take notice and start to kind of figure that digital really was the way to go. How has that journey of working with all of those businesses and some incredible founders, investors, etc., how's that journey kind of got you to the point of recognize that FreighInsure was a great problem to solve?
Yeah, I think every one of those businesses I've been involved with has shown me what to do and what not to do in recognizing opportunities and figuring out which one of those you can execute on. I'll take BizCover, for example. It does what it does so well. It identified a gap in the market, which is distribution of business policies to small and medium businesses in a way that they can access them quickly, cheaply, and efficiently online without a broker intermediary. And if you can deliver on that product promise, you've sold for distribution into a market that just isn't tapped by the majors. You need technology to do it, and you need the distribution agreements in place from the majors to be able to distribute their product as well. If you can do that successfully, you've got a really, really big business. And just because they're not large policies doesn't mean that the business itself isn't very large if the underlying market that you're serving is very large. And that's really the genesis of FreighInsure, that, freight, as you say, is not sexy, but it's a really, really large market with massive tailwinds causing it just to explode. You look at COVID and work from home, you look at the rise of e-commerce and the consequent movement of freight from large wholesale bulk shipments to small single parcel shipments, and the need to ensure that the end customer isn't bearing the risk of loss or damage. You've got a massive market, and you can figure out how to utilize technology compliantly to service that market. You've got a good business.
How did you, first of all, discover the problem to solve? Because we've known each other a while. You never ever kind of confessed the love of freight, all things freight. So where did the inspiration for the idea come from?
Yeah. So I've worked in a lot of industries, a lot of industry verticals over the years. You do that in financial services, you kind of become a jack of all trades. But I never really worked in freight and logistics. And I partnered with some guys who actually have been running one of Australia's other, least known but most successful insurances, Freight Safe, for many years. Australia's largest independent freight claims manager, with warranty services and claim management services for the high volume low value claims that arise in freight every day of the week. Someone's laptop gets lost, stolen, or damaged, and someone puts up a hand to DHL and says, come on, guys, you owe me for my laptop, and then they fight with you about it. That's what FreightSafe does. And their clients range across some of Australia's largest and smallest freight and logistic companies. It's a great business, and those freight clients have been saying for many years, we love what you do, but we wish our customers weren't claiming against us. We wish there was some insurance product that we could embed into our freight services when something goes wrong, customer claims against the insurance product rather than against us. And that's where FreighInsure was born. So I partnered with them. I had the Fintech Insurtech regulated financial services background to really build this business from the ground up.
Yeah.
We came with the freight, an industry experience and credibility. And between us, we've got a great business.
Brilliant. So in terms of customers, who are your customers?
So we run a B2B2C business is how we look at it. Our direct clients are Australia's freight companies, also many multinationals, from the small mums and dads running trucks to the large multinationals running freight platforms, in many international jurisdictions. So we work with those freight companies to embed our insurance product and the technology that services it into their freight booking platform. If you think about purchasing travel insurance, you'll go online to Qantas.com, you'll book your airline ticket, and at checkout, there'll be a button that says, do you want fries with that? Do you want insurance on your air ticket? And, we are the button and the technology and the insurance product behind it that enables us to put that button into freight booking platforms. So when you buy freight, you can add cover, for loss or damage at the click of a button.
So you the underwriters of the product as well, or what kind of model do you have?
Yeah, so we have an MGA model where we're the digital underwriters on behalf of our capacity providers. We essentially do everything from beginning to end, the pricing, quoting, underwriting, binding, payment, documentation, midterm adjustment claims. We do everything, end to end. And then our capacity providers, they're taking the risk on the performance of the portfolio.
Obviously, one of the biggest challenges for any earlier stage business or growing business, particularly in Fintech and Insurtech, is capital and risk management. Could you explain a little bit about the MGA model and how that works and the kind of innovation behind that? Because it's a pretty smart kind of move for a younger business who wants to grow fairly quickly.
Sure. A feature of our business and BizCover before it is it's a capital light business. When you have the capacity providers taking the risk on the portfolio, you're not an APRA regulated insurer. You're an ASIC regulated AFSL holder, but you're not required, nor do you need to hold capital against the risk of the portfolio. That's the job of the regulated capacity provider. What you do need to be doing is ensuring that your technology and operations run efficiently and compliantly so that you can do that entire end-to-end process from the quoting, the binding, the payment, the claims that arise from millions and millions, tens of millions of policies at fairly small premiums at scale. And you need to ensure that your technology and operations are configured so you can do that without it being cost prohibitive, either because the process is inefficient, or because you've introduced compliance or operational technology risk into your process.
Yeah, it's interesting because we often think of innovation as being this kind of highly disruptive, world-changing event. And yet really, when I look back over this, certainly the last 20 odd years that I've been in the space, all innovation has been incremental improvements and just, I think, kind of almost necessity-driven solutions to problems that actually kind of then turn into businesses that can then turn into industries or new product offerings as well. And I think the MGA model is a really good example of that, where we've seen some great businesses come out of nowhere really and adopt that model. Thinking of Cover Genius as another good example in that space.
Yeah, look, I'd say the MGA model is not new, and like you say, there's some changes. When I did my MBA way back, we were told there are two types of major innovations: product innovation and then distribution innovation. And I'd say that what we've done and Cover Genius and BizCover, before us, has really been step change in distribution.
Yeah.
The product is not new. BizCover, it's stock standard. Business insurance policies. FreighInsure talking about goods in transit policies have been around for a long time. What we're talking about is innovation in the distribution model. Embedding those policies into the distribution of freight, so it's an add-on to the freight purchase. In the case of Cover Genius, add on to whatever the underlying, product or service is that they specialize in more general embedded insurance. That's the innovation. It means you can now distribute that standard policy together with the underlying good or service where you've got access to this, as long as you can, use technology to plug into the sale of that underlying product, you've got much higher conversion rates on sale and access to the massive distribution that comes with the underlying volumes flowing through that system. In the case of freight, there are billions of freight shipments going through Australia, annually. And if you can attach yourself to, a small proportion of those, even to attaching to the underlying freight consignment at point of sale, it's a massive business, even with a small percentage conversion.
I think what's also really interesting is if you look at fintech, and certainly over this last 5 years or so, some of the key kind of, I guess, trends have been banking as a service, which that hasn't quite worked. And now it's evolved to embedded finance. And you think about embedded insurance, it's been around a lot longer than the embedded finance piece has as well. And yet it's not really talked about at these events, right? Like that I go to. It's almost like embedded finance is this new thing that's, we've just thought it up. And it's actually been around for quite a long time.
Yeah, no, it has. And I think the innovation here is figuring out how and where to distribute using that.
Yeah.
You have to think, where's the innovation going to come in insurance? It's not really product. It's not really risk taking because that's what insurers have been in for a long time. They've got a lot of data, a lot of experience, a lot of experienced people. Playing in that space. The innovation comes in distribution of figuring out where you can embed and how you can embed those policies so that you can do it at scale. And that's where the digital economy has really opened up vast markets. So you think about your typical consumer. It said that when someone buys something online, they want the same experience whether they're going through Apple or Amazon or Netflix or Qantas, or AIA or IAG. Consumers don't differentiate the product or service they're buying. They want the same, Apple and Amazon service in everything that they're buying online. So if you can figure out a way to offer those traditional products and services in a way that can be delivered to the customer, at an Amazon, or Apple pace, or brilliance of customer journey, you've got a business because you've innovated on the distribution. And then the MGA business model allows you to do that profitably.
Yeah. Before I launched Tier 1 People, a lot of my clients were insurers. And I think one of the kind of key frustrations that I had working with insurers, and I think it's still there, is that their idea of innovation was improving process in the back end. And as a customer, this is,
That's absolutely right. Because if you think about what insurers do, they're about the product and all of the operations that happen behind the product. Whereas distribution, traditionally in insurance land, that's what intermediaries do. That's what brokers do. So you're not innovating on the distribution side. You're innovating on the product and the product operation side. As you say, your clients would be thinking about how they can make the process more efficient on the back end. And the customer doesn't care. The customer wants to know, how can I purchase this policy quicker, easier, cheaper? Claim should be a brilliant experience rather than having to go through the intermediary. And that's what we and all of the Insurtechs like FreighInsure, try and do and are really able to do using technology if you do it well.
Yeah. So talk me through the FreighInsure business. How many people are you now?
So we're about 40 people between Australia and Sri Lanka. We utilize resources between the FreightSafe and the FreighInsure teams. And we use those legacy resources from FreightSafe, as part of the broader FreightSafe group where we can, and then we hire, specialist executives where we need.
Yeah. And in terms of the Sri Lankan team, is that operations, technology? What elements have you found have been able to offshore well, and what elements have you found you've got to kind of keep onshore to optimize the business?
It's a good question. You always have to tread very carefully because there are a lot of efficiencies to be had in offshoring, but you lose some degree of control and also some degree of locality, proximity to your customers. So we find that anything that can happen more or less in the back office, ought to be successfully offshored. And we've had a very strong and stable team in Sri Lanka focused on tech and operations for many years. Those functions which you really need boots on the ground local marketing, local sales, to some degree, local execs. Those are what we try and do based out of Australia. That model's worked very well. We don't use, labour hire firm to really have our own teams that happen to be based in Sri Lanka, and have been very strong and stable teams for years.
And in terms of, I guess, the kind of growth trajectory since you joined, Simon, where was the business when you came on board, and kind of where have you taken it to now?
Look, so I came on board at a conception stage. Together, we designed and launched FreighInsure in about 6 months from, design to launch. We sold our first policy probably 2 months later. And since then, the business has been, growing exponentially. We're currently experiencing around 30% month-on-month growth at top line. It's a very large market. It was very underserviced. And the more freight company distributors we get on board, it just adds incrementally and exponentially to the volume of policies and the premium flowing through the platform.
And in terms of scaling kind of challenges, has that presented any kind of issues to you as you've been growing at that velocity?
Look, it always does. I've worked across, as we talked about before, many startup and scale-up businesses, and they all have their challenges at various stages of that growth. You try and run the business with the resources you have, and to try and support the growth that you've got and forecast to get. It's no use, putting 100 people into a startup business, if there's nothing for them to do, you don't have the capital to do it. But you've got to figure out how you can bring the people on and have the capital to do so before you hit the growth that those people are needed for.
Yeah.
So we've managed that fairly well to date, drawing on the freight safe resources, and then hiring quite judiciously where we need to. Our challenges have more been not on the human resource side, more on the technology side, and making sure that our technology is flexible and nimble and fast enough for the application that it's been designed for.
Yeah.
So we've recently retooled our tech in process of migrating to new tech platform. And that's really been about flexibility and speed as much as it is about enterprise-grade service.
So we're talking just a couple of days after Black Friday, I think. Did you see a spike in your customers, and did that have any impact on you technology-wise?
Yeah, funny. You talk about a single event, Black Friday or Cyber Monday. Our clients who are the freight and logistics companies across Australia and internationally, they see this whole time of year as their peak season. Just because a sale happens on a Friday doesn't mean deliveries happen tomorrow. They might be staged over the next 3 to 4 weeks, and we find that November and early December is really peak period for the freight and logistics industry in Australia, particularly around the small parcel deliveries. What we've heard anecdotally is it's still peak this year, but for some reason it's a little less peak than usual. Some of the boil seems to have come off a little bit, but overall volumes are definitely up relative to prior months. It's definitely a cyclical business.
Hopefully Michelle Bullock's listening to this, and she might reduce interest rates.
That's right. You're going to do it quickly, in time for the goods to be shipped before Christmas.
And what are some of the cool things that you're working on right now?
So we're working on some really cool AI applications at the moment. A lot of the smarts in the underwriting is determining what sort of goods are being shipped by what sort of carriers, and what sort of transit routes. Where you've got structured data, it's great. You can map that to your underwriting engine. Where you've got unstructured data, customer says, I'm shipping a PS2 black and titanium 13-inch. It doesn't say electronics or game. You have to figure out, across a billion consignments, how to map that into your underwriting engine. So there's some pretty cool, AI applications that will take those large unstructured data sets and map them, into the categories that your underwriting engine needs. In early days, we've seen actually, really good responses at the moment.
You mentioned as well there's a rebrand coming. What was the kind of thinking behind that? And is there a danger that you kind of lose some of the momentum or the kind of brand recognition that you've already had?
So the impetus for the rebrand was really around, 2 years into the business. We're really clear now on what our essence is, why we exist, and what value our customers get from us. And it's really about embedded freight insurance. When we launched, the message was FreighInsure, we insure freight is what it sounds like. But really the embedded component is such a critical, part of our business and why our distributors and customers use us, that, we've kept the FreighInsure name, but change the brand logo so that it highlights the embedded nature of the product. If you, I'll give you a sneak peek. If you can sneak peek, if you can imagine a capital F with an I embedded, in the space that the F creates, inside that rectangle, that's the logo. It's the F and the I with insurance embedded within the freight. Really, really powerful because it tells people, in a single visual image, what we are, what we do, and why we do it.
And one thing that really kind of always fascinates me, Simon, is I see a lot of founders who spend an awful lot of time kind of creating values, for a culture, and then creating this other set of values for customers. And I kind of always wonder, like, what's the difference between your people and your customers? Aren't they kind of, at the end of the day, people, and maybe, you should have the same values for both? What was the journey that you went on, I guess, first of all, in terms of kind of figuring out what those values are, but I guess, secondly, in terms of the type of culture that you wanted to build? You've worked in some really, great businesses that have gone through some very rapid growth, but all of them have got very different cultures, right? And very different types of leaders. What did you kind of take from all of those learnings to say, hey, this is what good and bad, this is kind of taking all that into consideration. This is who I want FreighInsure to be. This is who I want FreighInsure to stand for.
Yeah, it's a great question. And in fact, our culture and values really inform the whole strategic rebrand. It's not just a logo rebrand, but it's looking at what is our strategic market, what is our market that we're playing in, and how do we play in that market to be successful? We use the cultural elements that I've learned from all of the fintech businesses I've worked with along the way, all of which have been high growth businesses. Some of them are focused on innovation, some of them are focused on execution, and some of them are focused on relentless customer satisfaction. Understand your customer, understand their needs, and make sure you satisfy them. And what we've built in FreighInsure is really the intersection of all three of those things, which is innovate relentlessly, execute relentlessly, and focus on your customers relentlessly to make sure that the innovation that you are delivering through your execution is what's going to make them very happy and keep coming back for more.
So you mentioned as well your kind of earlier career in investment banking. I'm guessing then you've seen every kind of pitch, every kind of problem, every kind of crazy, entrepreneur, or, the two guys from Bondi who are going to kind of revolutionize or Uberize banking. What have you taken from all of those experiences, kind of in terms of, if you were starting out again or you were giving advice to somebody as to how to identify the type of problem to solve in Australia where it's relevant to the market and it takes into account the fact that you're not in Silicon Valley, you haven't got loads of investors, you haven't got 350 million people living in the country. What guidance would you give people as to, where to spot those problems? And like you've done with FreighInsure, a problem that nobody's solving, right? And it's kind of an untapped market where if you execute well, you can get rapid growth like you're getting.
Yeah. Look, the first thing I'd say is that don't discount the two guys from Bondi. I'm thinking Larry Diamond and Nick Mullen.
Like let's putting Larry and Nick aside.
I think the quality of the founders is key. When I'm got my investment hat on and I'm looking at pitches, I'm really looking at the quality of the founders and their ability to execute. A business idea is nothing without the guys behind it that have, the experience and the drive and frankly, the success that's going to make this one a success. It's much harder to back an unproven founder than is somebody who's done it before. The first thing I say, the people are everything. The other thing is the market opportunity. I would always back a problem looking for a solution than a solution looking for a problem. If there's a clear market opportunity where customers and potential customers are saying, wow, if you were able to deliver this to me, or, this is the thing that's making my life a nightmare. If someone could solve this problem for me, I would buy that every day of the week. That's a good business. If you can figure out how to deliver that product to them profitably and sustainably. That's what, FreighInsure fundamentally does. And that's what BizCover fundamentally does. And I'd say Zip is in that category where, the founders of Zip and Afterpay tapped into almost the zeitgeist of modern consumer to say there's a demand for a product the customers don't even know they have. They delivered it to them, and the rest is history. I think SocietyOne tried to do that, but tapped the zeitgeist a bit wrong. The idea of society led lending and borrowing peer to peer is a great idea in principle. In practice, it just doesn't have the economies of scale or the price competitiveness that you need to offer a sustainable product and build a profitable business in the long term. I think most of those peer-to-peer businesses have since merged or disappeared.
Yeah, I think that's kind of one of the challenges, right? Is that there's often this kind of thing of, hey, we're changing the world, and we're gonna solve the kind of unbanked in Africa, or we're gonna and then you go there and you realize that actually somebody's already solved the problem. People don't want you to solve the right. What you think is the problem ain't a problem,
but it can't be solved profitably. And that's often the problem that you'll find there is a product market fit, but the two sides of strategy are, do you have a product that people want to buy, and can you produce that product and sell it profitably? And you have to be able to solve both of those two things, and that's really what we would look at. Is the strategy sound? And strategy is both market facing and also the ability to deliver into that market.
So there's a paradox, I guess, for anybody who is looking to get an idea off the ground or a business off the ground, in that if you kind of go to the kind of usual channels, the advice that you're going to get is focus on AI or focus on Web3 or whatever the next hot thing is. And so we see this kind of cascading of ideas all in these spaces. Nobody's going, hey, I think there's an opportunity in freight insurance. You might want to have a look at that. How do you get the inspiration, the ideas, the kind of discipline to, okay, I'm going to shut out the noise and I'm going to go and spot where the problems are? Do you have like a framework or anything that you kind of use to go and identify those problems?
Look, I use elements of it, but what you're talking about is essentially design thinking, which is you're not coming up with a brilliant idea, which is a solution, looking for a problem to solve. The latest AI thing, okay, what can I do with that? You're getting out there, into the market and listening to what customers or customer segments are saying, what their pain points are, what they really want, and then trying to really absorb it, stand in their shoes, figure out how can I solve that pain? If I were that customer, what would I want? And now how can I leverage my knowledge, technology and distribution and products and everything else to design and deliver a product that actually solves that problem? If you can do that, you're well on your way to building a business. I often say to people who come to me for business and startup advice, I've got this great idea. How do I raise capital for it? And I tell them, an idea is one thing, but a business is a completely different thing altogether. And being able to distribute that product as part of that business is, almost the be all and end all. It's no good building a better mousetrap, as I say, if no one wants to buy it. And even if people want to buy it, if they can't figure out how to distribute it, the idea isn't worth having. So I often tell people, focus on the distribution, and in a way that distribution will solve a problem for the market in which you're distributing. And then, the product design and everything else kind of come second.
Beautiful segue into the next question that I wanted to ask you, Simon, which is, it's one thing to be a founder and come up with an idea and get the funding. It's a completely different thing to be a CEO and a leader and to grow that business and to, be looking out for 40, 50, 70, 100 people. How have you developed yourself, and what kind of leader have you kind of really tried to become as you've gone on that journey?
It's a great question. I think the role of founder, and that of CEO are really quite different. The founder is the visionary, the one that has the idea, the one that moves the chess pieces around to give that idea, flesh and bones and legs and get it out there in the market. That's the role of the founder. The CEO is the one that has to hire, occasionally fire people and set the values and the tone, maintain relationships with stakeholders, make sure that, the operations are running efficiently and that the bottom line is profitable. It's quite a different practical. It's almost like the difference between, idea, innovation and execution. CEO is as much execution as anything else, and straddling those two roles at the same time, it's quite a challenge to get the balance right. Often, find myself coming down on one side more than the other over a period and having to look back and recalibrate and make sure that I'm doing both things. I'm staying true to the the founder part of my role, which is, the ideation and the vision and the relentless drive of the business forward in pursuit of that vision. And then the CEO role is about execution and operations and making sure that we have the people and the culture and the processes and the technology in place to deliver on that vision.
Have you found any, routines or daily habits or things that you've had to now introduce into your daily schedule that are now almost like rituals that you've got to do in order for you to be able to perform at the level that you've got to, but to be able to handle the challenges, the stress, the kind of protect yourself from and keeping your mental health in a good, and your physical health in a good spot as well?
Yeah, so I'd say there are really two things, actually three things that have done that for me over the years, and two of which I'm practicing now, and one of which I should practice more.
I've just given you a gentle reminder.
Yeah, it's great. So the two things that I've done and kept with me over the years are really regular structured exercise. You make time in your routine, in your day, in your week for, I will be exercising 4 times a week, 5 times a week at this time of day. And then I build everything else around that because, if you haven't sharpened your saw, you can't cut down the tree. So keep the exercise going as your baseline. And, with that comes good eating. But exercise, I really found you need to structure and stay consistent with. And the other thing that's really got me through is, as an observant Jew, I keep Sabbath on a Saturday. And that day where you switch off and you're not thinking about work and you're spending time with family and community and allowing everything else to process in the background without getting, drawn into the million things that suck you in your workday, I found actually it's been invaluable for me over the years, actually keeping grounded and going out, to do battle again the rest of the week.
Yeah.
The third thing I'd say is meditation. There was a time when I was meditating regularly, early morning and late evening, and found also it was very, very helpful just to stay centered, and have your brain not following every millionth thing that comes in through the day. I just haven't been as diligent and consistent as I'd like to have been over the years in staying true to that morning and evening meditation. I now do it sporadically rather than consistently.
And in terms of kind of learning, inspiration, and just keeping up to date with what's going on in the industry, there are any kind of resources that you use or podcasts that you kind of regularly listen to, that you sign up to that you found beneficial?
So I've been a long time reader of McKinsey articles, signed up to them, maybe 25 years ago when I started working professionally, and find that there's just a steady variety of articles on up-to-date issues and recap of historical issues with modern relevance, that if you just read a couple of these, every few weeks when they come out, you really stay on top of the latest thinking without going down the rabbit hole of very, you kind of sift out what's new, what's old but new, without being drawn into the latest and greatest. And there's always 1,000 of those a year. And how do you, with your limited time and expertise, figure out what's real and what's not? The most important thing, though, is in my experience, is to read widely and then just reflect on what's going to be useful for you. A lot of times, advice is good advice, but not for you or not for your company, for your values, not for your person or your brand. Letting it come in, but then going through the processing phase, which says, I wonder what the relevance is to my business and, and my person in my circumstances. And you get a lot more out of, that sort of approach than blindly applying the latest fact.
Yeah, look, I really agree with that. I remember I went through a phase, when I was a younger man, of really kind of having the type of adulation that you see people having for Elon Musk, I had for Richard Branson. And then as I started to settle down and think about a family, I was like, why am I following this guy? Like, he keeps doing all these stupid stunts where he could easily die and, should have died about 7 times, and he'd leave his kids without a father. Why would I want to follow that example? And I think as you dig more and more into it, your own values and, hey, what are you about as a person? It's critical, right? That if you're going to have mentors or people that you go to for guidance and advice, that there's that alignment around not only values and, hey, they've got to where I want to be, but they've also done it in a way in which I want to do it, whether that be, hey, treating people right or, whatever it is. And I think that's one of the kind of challenges that we got in society, right? It's like, people keep following false idols.
Yeah, I think that's right. There are, many, many management books out there and many, many, gurus and role models. And part of the issue is that people are so different. The more you read, the more biographies you read and follow, the more you see that there are parts of people and their approach and their values that resonate with you, part that you have a revulsion towards. The more you read, the more you can draw on, what speaks to you and kind of isolate what doesn't. But the second benefit of reading widely, I heard someone relate this anecdote. I can't remember who it was. That they love reading all of these biographies of founders. And it's not because they want to learn how that founder did it, but it's because they want to keep teaching themselves the lesson that each founder did it differently. They did it their way. And it kind of gives you hope and inspiration and strength that there is no right way. I just have to find what my way is. And I might draw inspiration from these various people, but ultimately it's going to be a unique path dictated by your personality and your circumstances in your business and, your partners and all of those things. So, the more you read, the more I think you internalize that lesson.
It's a brilliant point, right? Because if you look at the startup scene in Australia, 99% of people in that space are all trying to be the next Canva. And what did Canva do? What did Canva do? And it's like, well, that's the outlier, right?
In the end, Canva did both what it needed to do and what it could do, given the opportunity and the resources that it had. But, your opportunity and your resources are going to be completely different in your circumstance. So you've got to figure out what is going to work for you and, do that to the best of your ability.
Now, normally what I ask people, Simon, at this point of the podcast is what's got them excited about fintech. However, I'm going to ask you something slightly different because there was an announcement recently. You've recently joined the board of Insurtech Australia. That's an organization that's very dear to my heart, having been at the very first meetups before Insurtech Australia was Insurtech Australia. And it's been, I think, a slow kind of, I think grind for the Insurtech space in Australia to start to really get some momentum. But in the last 12 months, I think that we've really started to see now a lot more happening in that space. Some great businesses like yours and Upcover and Honey, all kind of starting to break through and really get some momentum now. So kind of what's your take on the Insurtech scene in Australia right now?
Yeah, I think as you say, the Insurtech scene is really humming. There's been a lot of businesses that have made the headlines for all the right reasons. I think a lot of things have come together. The technology, the market opportunities, capital is starting to flow in, and you've got personnel and executives who have some experience now in prior ventures who are able to help support and grow those businesses. So I'd say there's a lot of stars aligning well for the Insurtech industry. I look at what's happening in the US, and it's been a very large industry, Insurtech in the US for, I'm going to say, a decade now. And what that means is that both sides of the market are really, really humming. You've got a lot of capital coming in, to a lot of businesses, a lot of deals being done. And it's a virtuous cycle. The more capital comes in, the more deals are done, the more deals there are to be done, the more capital, comes in. And similarly with HR, the more, successful growth and launch and valuations you get in an industry, the more people want to join that industry, the more people join industry, the more support you have to grow. And Insurtech in Australia has kind of reached that threshold where you've got a critical mass now of both people and capital in the industry that the businesses are really starting to take off, more and more of them. The more they take off, the more capital and human capital you can attract into the industry. So I think it's got a lot of tailwinds from here.
And what's your sense as to the incumbents? Are they kind of starting to now become a bit easier to play with and inviting people into the tent, or they're still trying to kind of put the big moat around their business?
I think it depends where the Insurtech or, for that matter, the fintechs are playing. Where they're competing head on with the incumbents are absolutely going to try and, use their scale and capital and resource advantage, to try and crush the upstart opposition. I think that's what happened with SocietyOne, frankly. If you think about Insurtechs so that are servicing untapped markets using technology or distribution in a way that the incumbents cannot because of their legacy technology, because of their legacy distribution models, what you find is that those legacy players are very happy to partner with the Insurtech startups because they're doing things that the incumbents cannot. If I look at, BizCover as a prime example, BizCover is distributing standard product from QBE and Hollard and AIG into the market in a way that those incumbents can't because they don't have the technology or the distribution reach that BizCover was able to create. Similarly with FreighInsure, we're doing exactly the same thing. We're not really competing with the incumbents on product. we're just distributing into a market that they're not able to access. And so they're actually quite happy to distribute through us into those markets, given the chance.
Well, I can't believe we're almost at the end of the show, but we're almost at the end of the year as well. What can we expect from FreighInsure in 2025?
So you're going to see a lot of growth. You're going to see organic growth. You're going to see product growth, and you're going to see geographic market growth. A lot of really cool things on the horizon, underpinned, as I said, by the retooling of our technology. We're really looking to become much more dominant, certainly in the Australian market, and then become a player globally by the end of 2025.
We get some amazing talent listening to this podcast. We all listen to in, I think, over 40 countries as well. If there's anybody listening out there who likes the sound of the growth journey that you're on and is interested in careers at FreighInsure, where's the best place for them to go, Simon?
The best place is to reach out directly. We are growing and we're hiring steadily. For the right person, with the right role opportunity, we definitely have a chat.
Brilliant. Simon, it's been fantastic to reconnect and find out more about FreighInsure.
Great to chat again, Dexter, and really thank you for your time. It's been fun.
Brilliant. As always, folks, you can connect with me on LinkedIn. If you're new to the show, make sure you give us a follow and a like. If you're on YouTube, subscribe and hit the notification bell. If you're coming back, thanks so much for your support. It really does mean a lot, and it really helps me in getting great guests like Simon on the show. Until the next episode, keep well.